Right, welcome to the Nadex Application and Strategy Webinar Series. My name is Daryl Martin. I'm with ApexInvesting.com. Apex Investing is its own company. I'm a trader. We have about 7,000, more than 7,000 now, I guess, traders over at Apex. And some are actively involved in rooms. We've got a ton that are posting in the forums. And it's just a big community of traders helping traders out. And before we get started on everything else, let's dive in first into just the fun disclaimers. So I'll put those up there for you real quick, give you just a second to look at them. Alright, so that's page one. Trading involves risk. Know what you do before you do it. This is unique information provided by Apex Investing. And then here are the disclosures right here. This is also just the additional disclosures we got to put up. All right. With that being said, make sure you check out our website over at ApexInvesting.com. But before you do that, okay, like a step to take right now, hop on over to Nadex.com. If I can type correctly, that'll help. Nadex.com. And go to Trading Demo Trading Account. So some of you said you don't even have a demo account set up yet. This is where you want to go, okay? And I'll post that link right there for you. But just click on Trading Demo Trading Account at Nadex.com. Fill in your username, first name, last name, phone number, and email address. And click Apply for Demo. Once you've done that, then check your email, and they will get you going. So just check your email. You'll get a password. You'll be able to log right into your demo account, and you'll just click over here. You'll click Log In. And you'll click the demo account link, change that to whatever your demo password is, demo username, click demo. You can also log in on the mobile app. They have a Windows app, they have a Android app, and they have a iPhone app. And just put demo dash, make your username short so you can log in on them. And once you log in, you're probably going to want to change that password over here, right here under settings. You can change your password to one that you'll remember for next time that you log in. Okay? So this is a setup we taught everybody last week. We did a new platform training in our webinar last Thursday. So sort of showed them how to set up their Nadex platform to get it all up and running. Once you get that going, next step is get that demo account extended. Go ahead and create a live account, fund it with $100 or more, place one trade or more of any size, and then call up Nadex, ask them to extend that out. And if you have any questions about that process, you can call Nadex or you can contact us. We'll be happy to help you out. So how do you contact Apex if you want to learn more about how to trade? Hop on over to ApexInvesting.com and then let's click on Get Free Access. Once you do that, then log into the members area. Again, it's completely free. And I know about 15% of you on the webinar tonight, brand new, don't know what's going on at all. We have a lot of education for you. And so I'm going to walk you through some places to go to get questions answered. First thing is register for our Thursday webinars. So right here you'll see weekly webinars. Just click on that, click on the link. That'll get you set up and running. And we have just open Q&A Thursday webinars. Okay? They'll be topical, and then we'll do some open questions. And then right over here, go over to the trading question forum. Anything you can think of that you're looking for is probably inside this forum. We cover trading psychology, money management, to trade when, what, where, what kind of a schedule, platform, data feeds, underlying market platforms, and brokers and internet access and trading computers and everything under structure. Under socialize, of course, it's, interacting with other traders, trade rooms, chat rooms, things like that. Study, that's going to go into indicators, Apex and non-Apex related. Strategy is different ways to trade. We're going to talk about some strategies, and we'll talk a little bit about some systems tonight. Strategy is like buying it in the money binary, or buying it out of the money binary, or buying it out of the money and in the money, or there's any combination thereof. System is when to do it. Like when do I buy? When do I sell? And then style is which one do I do? So I got my chart set up, and I'm going to use a strangle strategy, but when should I use the strangle or the iron condor, the iron butterfly, or whatever. And then now that I know which one I want to use and how I'm going to use it and when I'm going to get in and everything else, which one do I want to use? So over here under scan. And then, style is just reading the market. It's sort of it's the next level. It's the 1, 2, 3s of the ABCs. I talked about that a lot in the last two webinars. And then synchronize. That's just putting it all together. And survey what I do right that I should repeat, what I do wrong that I shouldn't repeat. And then under the general forum, where you're going to find this webinar, where you're going to find other webinars. We have a whole section called Apex Webinars, so you'll see newest webinars right there. You'll also see a bunch of Nadex and spread webinars. These are usually 1-2 hour webinars. They may not be where you want to start, okay? But they're very topical based, so you can find webinars on just about anything you can think of. And we're slowly moving these into the topics that they belong to in the sections of the website. And so that's where you'll find this webinar. Under newest webinars, you'll see it, we'll be posting up each one of them. Like there's 4 personalities of traders from last week that we did. So a lot of different things. If you go over here as well, you want to go to education and go to Nadex. If you're brand new, this is really going to help you out. How to get started with Nadex, who is Nadex, why would I trade at Nadex versus somewhere else? How do I use their platform? They have some new stuff coming out you may have heard out about. We'll have some new stuff under there. The spreads, the binaries. So, AB, there's some big ones in there, but there's also a lot of small videos in there, like 15-minute videos, like intro videos. And we're going to take those small ones and put them into a nice little binary and spread course. Then some contract specs. How do they work? Maybe you're brand new to trading. You don't even know what futures or Forex are. And we're following futures or Forex. Well, you can watch Intro to Various Markets. It'll tell you what futures are, what Forex are, what Forex is, different things like that. I have a radio show every day. You can follow along. I go into markets. I weigh out my news trading plan. I post it over here under news. So you can actually see the news trading plan we list up there every day. And so there's just a lot of resources. There's also a scanner, a binary scanner, and a spread scanner, and the tutorials on how to use it are all built right in here. So you definitely are going to want to start there because it'll make finding those contracts a lot easier. You will not believe how much easier it is to trade when you use the scanner. It'll seem intimidating at first, and then it'll get really easy, and then you won't even want to touch the platform. And that's free. So all the education's free, the scanner's free. So there's a lot of free stuff in here to help you get going. Okay, so don't feel like you're on your own. Don't feel like you need to go pay a fortune for somebody to teach you basics. And when you're ready to go to another level, we're here for you. But while you're figuring it out, we're also just as equally ready to help you out. I mean, we all started out just trying to figure out the basic questions. Okay? All right, so that's where to get started. Let's go ahead and hop on over. And I'll put that link in there for you. Real quick. Okay. What are we talking about tonight? We're going to go into nighttime range-bound strategies or premium collection strategies. And we'll talk about butterflies. We're going to talk about iron condors a little bit. And how to easily find those opportunities. What is a range-bound strategy? And just how to put all the different pieces together. Okay? Let me see here. Close something down. Move over. There we go. And yeah, Sonny, if you're having any issues at all, hop on. Though if you're ever trying to access something, you got a question, because this is really a Nadex-focused webinar. But right over here in the bottom right corner, just click here to chat, and somebody will help take care of you, okay? All right. So, it'd be like John or Austin or Tony or, who knows. So, nighttime, part-time strategies. There's, short-term scalping. I covered that in depth a few weeks ago, and let me see if I can pull that up. But if you just go in again to the forum, the forum section, and you hop over here to the newest webinar. It might be under newest webinars. We'll check and see. Go back up to general. Go up to newest. I talked about nighttime scalping, and there is a lot of nighttime scalping opportunities that you can take advantage of. Okay, I got it trading at night on Nadex, and went into that quite a bit. And so I'd highly suggest you check that out if you're interested in nighttime scalping. And that was even some out of the money trades. So sometimes like $10, $15 trades, and we're usually going for like $20, $30, $40 on those. And there's plenty of them. So that's a scalping strategy, but we're going to go a little bit more, focusing more on the range bound. Range bound scalping is in and out, usually within minutes, which is great. When you got some movement, you may not have as many of them because it may, nighttime can be really boring, really flat. But that's your schedule. Maybe you have just a daytime job. Maybe you have other things that you're doing. Maybe you own a business and you don't have time to trade during the day. I know one of our traders. He just trades for either an hour in the morning or an hour at night, and that's it. So, you may scalp with that, or you may decide to do some premium collection. And I used to have a trade I called my iron golf trade. And iron, by the way, means collecting premium. We can go into the whys and all that stuff, but it basically just means that if time passes, you make, and the market doesn't move too much, you make money. That's basically what it means. And because I'd put this trade on, and I would go play golf. And it's just, I did it for years on end. And it was collecting money on time. There was nothing to do. There was nothing to watch. It's just let it do its thing. And I had, my take profits in. I had my risk management plan put together. And that's really what part of what premium collection is about. Sometimes premium collection trades take 30 seconds. A lot of times they may take an hour, half an hour, 2 hours, 4 hours, 6 hours. Okay. Maybe a 1 day. It can even be a 1 week premium collection trade. So, this is not just nighttime. It's also part-time, meaning I don't have 3 hours to watch the screen. But I would like to have, maybe if I can go in and I can collect 10, 20, 30%, on investment, that'd be awesome. So, maybe if I can equalize that out to a, 1-to-1 risk reward ratio, that's even better. So, first thing, let's go into just at night, what time, what markets are open. And let me bring that up for you. So we're going to go over here. And it cracks me up because almost every day I see somebody be like, man, this market isn't working. That market isn't working. It's like, because it's not open. If there's nothing there, it's not there. So if I go over to the binary scanner right now, and I'll see, for instance, let's see here, let's open it up. At the top, you'll see corn and soybeans is not open. Nikkei's not open yet. Small cap's not open yet. Got about 45 minutes. U.S. indices or international indices not open. That's why there's an X next to it. So that helps you out so we know when things aren't open. We also put at the top of every screen, every chart, of when a market's open or not. But so there's a lot of markets open right now, but which markets specifically, okay, if we're looking at all these, have expirations at night? Okay? So just real quick, do a quiz. Who knows what markets have expirations every hour in the evening? An open quiz here first. All right, there we go. Forex pairs. Yeah, supermarkets. Euro dollar, dollar yen, Aussie dollar. There you go. Yeah, so it's right now you got Aussie dollar, Euro dollar, pound dollar, okay, US yen, and Euro yen. Those are your 5 pairs. See, I'm trying to see all the first person to post everything. So people put Forex. Well, Forex is accurate, but they're not every hour. Okay? So, it's not every one of them. Now, they do have nighttime expirations, but they may have 1 or 2 at night. So, pretty much every hour, 7 o'clock, 8 o'clock, 9 o'clock, 10, 11, 12, 1, 2, 3, all the way till 5 o'clock the next day. Okay? You have expirations on these 5 pairs. Aussie dollar, Euro dollar, pound dollar, US yen, and Euro yen. So we can scroll down here and you can sort of see if I get rid of my filters up here. And we can see there's the 8 o'clock. 7 o'clock's already passed, obviously. So there's the 8, there's the 9. And then, of course, we have the daily expirations. So the daily expirations are at what time? Who knows what time the daily expirations on Forex happen? See if anybody can get this real quick. And by the way, kudos to Thomas, who listed all 5 FX pairs out first. All right, so we got a few guesses, we got pieces, but we might have a winner. Almost. Oh, there we go. Thomas won again, man. You know your stuff. Good job, man. Christopher, like right there. You missed one of them. Okay, so we got 3 a.m. Let's start in the evening. We got 7 p.m., 11 p.m., 3 a.m., and then 11 a.m. and 3 p.m. So they'll be going around the clock. And you can see them on here because they're all listed. There's the 3 o'clocks. There is the, let's see. So we got 3 p.m., 11 a.m., 7 a.m., 3 a.m., 11 p.m., and we'll also have 7 p.m.s at 8 o'clock. They start 23 hours before expiration. Okay, so the daily FX start 23 hours, of course, with an exception on Sunday. Start because there's not like a 7 p.m. on Sunday. Okay, but there is an 11. They'll start 23 hours before expiration. So what that does mean is those who set FX at night are accurate that all the FX pairs, okay, will have expirations at night at 7 p.m. and 11 p.m. The reason I bring that up is because I don't want you to forget about those pairs at those times. Okay? I don't want you to forget that all of them. So when you're looking at like a potential strategy, you can actually take into account. Maybe you're looking at 7 p.m.s, 11 p.m.s, 3 a.m.s, 7 a.m.s in the morning. Okay? And of course you got the 11 and 3s in the morning, but that's easy. But, but some of them don't have those nighttime expirations. Some do. But don't forget that all of them have those 11 p.m. and 7 p.m. expirations that you could be looking at. I trade on the spreads. I trade the 7 a.m.s all the time. Right? I'll go and I'll look at the 11 p.m.s, and at 11 p.m. I'll enter. For a 7 a.m. expiration, I'll do iron condors. And we'll talk about what those are. So that's just sort of knowing what markets have a lot of expirations at night. Now you have one other market in the evening, at least in the U.S. evening, and I think Kyle got this one first. So props to Kyle Ryan. I got the Nikkei. So the Nikkei will open up here and in a little bit, and we'll have 2:25 a.m., but they also added the intraday expirations on it now. So we're going to add in a new expiration schedule to add that in because they keep adding in all these expirations, but now we have the intraday, like every hour expirations that start up in the evening. So if you're a late evening trader and you're looking for an indice to trade, that can be a great place to go. The challenging thing on the Japan 225 is to get underlying market charts. It's not that it's hard, it's just that it's not free. Okay? We teach you on Apex, one of the first courses we have up here under education courses, getting started. We teach you how to get actual underlying market charts and a platform for free with live data for Forex and live data for futures. And a lot of you, maybe y'all are Forex traders, you come from the MetaTrader world, and it's really the biggest mistake I see among Forex traders is they don't use volume. Because they say, well, there is no volume on Forex. I mean, it's over the counter, and et cetera, et cetera. And that's because that's what they've been taught by MetaTrader 4 vendors that are out there. And because MetaTrader 4 doesn't give you real volume, it gives you what's called tick volume. Every time the price changes, you get a volume. Like if it moves up and down a tick, that's more volume, okay? And so every time there's a new quote, it just keeps adding up every quote. And that becomes the volume. It's not actual transactions happening. So what do you do for volume? You need futures Forex, like 6E, 6B, 6J, 6A. And you can combine those to make the crosses. So when I trade spot FX, I use futures Forex on my charts. And on MetaTrader 4, that's not going to happen. And so you're really missing out. Like if I go over here, I don't know, we'll pull up, pound yen or something. And so I'll go, and that'll take a minute because we got to pull all the pound info and all the yen info. But anyways, as that opens up and gets loaded up, I'm going to use the futures Forex volume. There it goes. That wasn't too bad. And so right there, the futures weren't open, so that's why it looks like there's no volume. But just the way that it posts, but it actually does record information, so it's pretty cool. But we go in and we look at it, and so we're actually looking at what the actual volume is on the futures pound and yen, so 6B and 6J, and we're looking at what the expectation is, so if we know it's a higher or lower than expected volume expectancy, which is huge for nighttime trading. Okay, so we're definitely going to be using that in our trading strategies. We want to have that expected volume helping us out. But if you're a trader who is not accustomed to using volume, definitely come on over to Apex. We'll help you out. We'll show you how to get all that set up. But you need that. Japan had a holiday yesterday. So I don't believe, maybe I'm wrong, I can check, but I don't believe when I was looking at it last, maybe they're still on holiday. But it looks like, nope, they're done. So they're coming on back. They did have holiday yesterday. But even if Japan's on holiday, now that may knock out the Nikkei, so that's maybe what you're talking about. So the different hours and things like that. But as far as the US yen, you can still trade it. And then the Nikkei will open back up the following day if they're closed. And Nadex will post that when you log in. Don't ignore those messages. On the live account when you log in, you'll see those messages pop on up. Okay, so now also one thing some people sort of forget about or don't know is that if you go back over, is maybe you're an early AM trader, maybe you're an early riser, maybe you're on the East Coast, get up a couple hours early. I know whenever I traded, I used to trade at night at first, and then I got into where I actually found it was better for me to trade in the morning. Now, this was a long time ago. Now I've learned how to trade at night as well, but I want to trade during that high volume. And so I'd get up a few hours early. I'd just go to bed earlier and get up a few hours early. And it was not fun. I'm not a morning person, but I wanted to quit my day job, so I did it. And so the DAX and the FTSE start trading like at 3 a.m. So you can take advantage of those as well if you want to trade in the early Euro session. Okay, or I guess that'd be pretty much in the Euro session. So the early AM here in the U.S. Now your daily strikes, Sonny brings up a great point that the daily strikes will have wider strikes. That's not bad. I mean, it's not great, but it's not bad. All it means is that the strikes are a little further apart. So, but it depends on where the market's at when you go to look for a trade. I see so many traders mistakenly just write off certain strikes and not thinking, well, maybe I should look at it. One of the advantages, for instance, of the scanner is it'll go in and it'll merge different strikes together for you. Okay? So if we go back up here, let me get rid of that. There we go. What it'll do is whenever we roll around to 9 o'clock, it'll have the 9 to 11 intradays and the 9 to 11 daily. See how it says I and D right there? It'll have them together. So that way you'll get your intradays and your dailies at 11. So you'll get even more strikes on some of them. So just because they're wider doesn't mean that's bad, doesn't mean that's good. Obviously, I like the narrowest strikes I can get. Been working hard on making that happen for y'all. But don't just write them off because there may be a perfect strategy set up. There may be a greatly, an excellent price binary. It really depends upon what the implied volatility is in the market. And you may not know what implied volatility is, but it's really, really going to impact you. Yes, the scanner is 100% free. Implied volatility is expected movement. It's what affects all options. Call options, put options. I mean, like the actual real ones, not the bucket shops, but call and puts like over on CBOE, CME, Nadex spreads, Nadex binaries. They're all impacted by what's called implied volatility. And the lower implied volatility is, the cheaper options are, and the easier, the easier it is to get a really close trade with low risk. The higher implied volatility is, then the more difficult it can be. Let me pull up a daily chart over here, just on the VIX for you real quick, and show you sort of what I'm talking about visually. And it's getting better, it's starting to pop back up. But just looking at the VIX, okay? And the VIX is the implied volatility measurement of the front and back month options on the S&P 500 index. And you can see how it's been way up here to like 31, but now it's way down at 12. It was lower. It was down at 10. It was like all-time. We were getting down to all-time lows down here, at least over the last many, many years. And without going into a big explanation on the VIX, the higher this number is, the easier premium collection is, because the further away your strikes are and the more premium you're going to get. So it has popped up a bit in the last couple of days, and that has a pretty good impact on it. The lower it gets, the harder it is to do premium collection. So, yeah, exactly. So big news events are going to impact that. The market drops, that'll impact it. That recent, the unfortunate events like the plane crash in Gaza, things like that have happened. That obviously creates fear in the market. That creates potential expected movements in the market. People hedge off positions. They buy more options. The more they buy, the more premium goes up because they're hedging with fear. They're running out and buying insurance. Okay? So just be aware of that. Always be thinking about, if it's low, it's not because somebody's pricing them too low. It's just that's what it is. It's the same model on everything. I don't care if you're trading on CBOE, CME, Nadex. They're all using the same models. Okay? They all come back to a derivative of a Black-Scholes model. Okay. The VIX changes every day, every minute. So our deviation levels actually come from implied volatility. So, yes, it is recorded. It'll be under General Trading Forum at ApexInvesting.com. Anyway, so hopping back on track. Let me pull this up. All right. So I just want you to keep that in mind. Premium collection can be impacted by implied volatility. So let's talk about range-bound markets, and let's talk about news trading and how that does impact it. Up here at the top of our website, we have a free plan, news trading plan. Pretty simple. I usually go to the monthly view. I like it better, but whatever suits you. And there's a little legend down here that talks about it for you. And we have straddle trades. Those are yellow ones. That's where we buy above and sell below. And we have iron condors. That's where we buy below and sell above. That's premium collection. We have ones that are like, hey, just be aware that this is coming out. Okay? And if you don't know what an iron condor is, we have a whole section full of trainings right here. Just go to the 27th of this month. We roll it forward to the last, Sunday of the month. So we just keep rolling those trainings forward. And I have PowerPoints. I have radio shows where I've done trades. I have all sorts of stuff in there for you. But you need to be aware of the news. That's the number one thing I want you to look at. I don't care if you're trading it or if you're not trading the news. You should always check the news every day before you start trading. Know when something is going to come out. And a lot of times I even, like on there, I'll say, here's the expectation of movement on average. So you can know, at least, not know, but you can at least have an idea of how far does the market usually move when this report comes out. And I analyze this every day live on my radio show. I go through it, and then one of the traders at Apex, actually, Caleb helps out. He goes in and he types it all up and posts it. And but so we have the entire plan, like for the week laid out. And going into this week, we got 21st, 22nd. So really not a whole lot happening right now. We have a couple trades we're going to look at. There'll be a lot more that'll get filled in here tonight that you'll see. So once he gets all the stuff caught up from the day, I went through a good Monday, Tuesday. I went through Tuesday, Wednesday, and Thursday. So all that will be up tonight and on there, and you'll be able to check it out. But be aware of, when Yellen's going to talk. Be aware when FOMC comes out, when NFPs come out, when PPI, CPI. You don't even have to know what the announcement means because, honestly, it doesn't matter. Unless you're doing like 5-year long-term trading, you're looking at massive fundamentals, and you have time to let the market move over years. All you care about is what's coming out, what kind of impact is it going to have. The more news there is, the more implied volatility, the more expected movement there is in the market. The less there is, the lower it will be. Okay? But be aware of the news. That's the first, number one, I guess the first thing is I want you to know what's available to trade. The next thing is I want you to make sure that you're aware of the news. Whether or not you're trading it, you can use this to help you out. And you can even ask, news or news trading questions. You can ask questions about the news right there, or if you're inside of any of our, trading rooms, you can ask us as well. What is range-bound trading? So that's a big topic of the nighttime range-bound strategies, right? Range-bound trading it can be flat markets. It doesn't have to be, okay? It just needs to be a market within a range. So it only goes up or, down so far. So here's the pound yen, usually a very volatile instrument, but let's check it out. It's staying very much, range-bound, okay? Usually it's not trending. So I'm not going to say so much it's flat, but it's usually not just like going really fast. Either it's going slow or it's staying within a range. Okay? So not trending. There you go. Yep, that's right, Carlos. So doesn't have to be flat. It's just not trending. And it could actually still be a trending market, just not a fast trending market. Okay? And like tonight, we've got very flat markets right here on pound yen as an example. So when you do expect it to be a flat market, that's really when you like range-bound trading. That's when you're going to really focus on it. But again, as long as it's going slowly, it's okay. If it's going fast, then you may have a little bit bigger of an issue. But we're definitely this range. Let me update this. This is showing 30 minutes. And I'll roll over here. And basically I go, okay, how far is it going to move the next hour? So if I had 60 minutes till expiration, I want to know what the expected range was. I changed this expected range indicator right here, and it tells me for every hour of the day what is the expected movement. And usually the market stays inside that expected range, as you can see. So if you want to know what I mean, look at the green box and look at the red box. And the green box is saying how far from the open to the high should it go. The red box is saying from how far from the open to the low should it go. And then this measurement right here is just showing from the high to the low, like how far has it gone. So for instance, if we go over here to the current hour, it said last hour from the high to the low, it should move 8 ticks. Okay, it moved 8 ticks to the tick. The one before that, let's see, it said it should move 8, it moved 6. The one before that, we said it should move 8, and it moved 8. So like literally every hour, what's your expectation? This is, I think, one of the biggest mistakes traders make is they don't have proper expectations on how far a market's going to move. And if you don't have proper expectations and you're trend trading, you're buying these $5 binaries, these $10 binaries, even $20 binaries. If you don't have proper expectations, you don't know where you're at in that expectation, an objective, not your own personal opinion, but an objective direction, not so much even direction itself, but range of movement, then you're really trading blind. You need to have proper expectations. A high to low retracement again is, okay, so we got, this is like from the open of the hour, like from 2 o'clock to 3 o'clock, okay, open to high, that's the expected range to high. Open to low, that's your expected range low, okay? But, the market doesn't always go just up or just down at the top of the hour, right? It may go down a few ticks and then up a few ticks. Here's a good example, right here between 3 and 4. Notice how here the market opened up at 173.07. It went down to 173.05. It's just a couple ticks, but it went down a couple ticks right there. And then it went up. Notice we didn't hit the top of the range. But the expected movement was 10 ticks. Well, if we measure it, and this may not be perfect because I'm not getting right in on it, but I'm guessing if I can get pretty close here. Yeah, like I said, that won't be perfect, but here, let me change this. We got a low of 173.05 and a high, and it'll be 173.15. So if I go over here and I just update that and put in 173.05 and get real specific here, 173.15 is rounding up. Click OK. It shows me that it moved from the low to the high, it moved 10 ticks. Okay, so a high to low retracement is, it's not even so much a retracement. It's a high to low move. So, right there, that's my expectation of from the low to the high. So, red means how far has it moved up from the low. So, it's moved up, 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 up. It's moved 10 ticks from the low. That's why it's red. And when I get to this line, I usually expect the market to pull back. Unless I'm getting a whole lot of volume that's going to push it through, I usually expect it to pull back at that point. And it does. It turns around and pulls right back down, and we go into a new hour. So I really want to use that expected high to low to give me an idea on when I've sort of hit that expansion point and the market's expected to contract. Because what if I buy right here? I'm asking just to get nailed, okay? So I don't really want to buy like right at the top of the expected movement for an hour. Now, what other way, and this goes into our topic, what other way does this help you? If you're range-bound trading, so if you're trend trading, it's like, hey, I love it when I can buy right here on a trend and grab, maybe like 7, 8, 9, 10 pips, which can be huge on Forex. That can be, everything you need. How could this help you on a range-bound strategy? So Sam says, yeah, you're right on track. So it can help you pick strikes. How could it help you pick strikes if you had an idea on an expected high to low move? Maybe how wide to pick them? So what some of our guys will do is they'll go in and they'll add in. This will be easier. Let me just change my template up to this boomerang right here. And what they'll do is they'll look at two things. Okay? They'll look at one, the open of the high, the open of the low. Harold, perfect. Yeah, where to take profit. So if you have bought, might be time to book it, right? So that's a very, very good point. I mean, look at this trade right here. You went in, let's say you caught this. You bought, it went up the expected move. I mean, you're like a couple ticks off. Might be time to take some profit. Let's say you fade it. You go short. Maybe you do an in-the-money trade. You sell just right above the high. Okay, that's the classic, we call classic boomerang strategy. You just go in and you sell right into it. And then we have volume exceeding expectations on the way back down and on the way up. So up there we get volume exceeds expectations. We sell right when this bar breaks this bar's low. It goes down. And now we've hit expectations again. We hit the entire range again. We take profit. And then it turns around, volume exceeds expectations again. It turns around, we get a reversal bar. It breaks that reversal bar's high. And we go long again and take profit again. But if you wouldn't have taken profit on, say, this buy and it came back down against you, maybe you bailed on the trade. Okay? Or if you went short on this trade and you never took profit, it could have went back against you. You could have ended up losing on the trade. So putting those pieces together really helps you have an idea of maybe where you want to take profit and how you want to put certain things together. And yeah, so you also have things like support and resistance. I would use deviation levels, more importantly than support and resistance. If I'm using support and resistance, I went over this on my radio show Friday. It's in the archives under Diagnostic Trading Hour. And I talked a lot. I also went over it on the Bull Bear Binary Hour in the morning and went into more detail between those two shows combined. And I say Cameron and Kelly and Sherry, and then we're pulling all those off, putting them up on our site for you. But you can also find them under the archive section. But I go in and I talk about, if I was a trader, where would my stop be? That is the real support and resistance you want to be aware of. Not just they happen to line up, but why do they line up? Where would you put your trades? How would it work? And I walk through a chart, like step by step, on oil and showed like where exactly to put the trades. And it was similar to support and resistance. Let's see if I got it over here. So if I can find that one. I wonder if this was it. Yeah, this was it. And so I went in, and this could be done at night as well as during the day. Okay, this was just daytime in oil when I was talking on my show. And the market came up, it hit settlement. So like we've been hitting settlement over and over again right here. This is the pound yen. Hit it over and over and over and over again. So settlement's a very, very powerful number. And so if I pull that settlement chart back up, I'll show you that on oil. This is a lot more powerful than your standard support and resistance lessons that are out there. Support resistance always seems to work until it doesn't. It doesn't really seem to help out a whole lot. But what does make sense is where are the orders? And so I'll go in here and I'll look at it and I'll go, okay, well, if I would have bought when the market bounced right off this deviation level, it was one deviation move. And if I would have been in here and as a trader, I would have came in and this all ties into range-bound trading because it'll teach you the style piece. So the market hits a deviation move. That is your real support level, and it's confirmed as support. Once it starts flying up. So if you go in and you're a trader, and you bought there, where's your and think like an oil trader, not like a Nadex trader. Okay, because if you're going to trade a derivative, you got to learn how to read the underlying instrument. Okay, you put your stop right there. That's where your stop loss would be. So where's the market going to go? It's going to go to where everybody's stops are at. Markets always go to fill orders. It doesn't matter if it's a stop entry to take profit, if it's a stop loss, if it's, they don't know, they don't care. All they know, if you're somebody who knows how to move money, you're a market mover. And I'm not talking about market makers. Market makers are there to make bid-ask spread. Okay, they are not there to trade against you, which is often just a confusion that traders have. Market movers are big traders. Okay, and they're literally trading directionally. And if they're trading a big position, they got to know there's going to be orders there so they can get out of it. So they come in and they think a step ahead, which is how you want to learn how to think. So I call it diagnostic trading, is thinking a step ahead. So you go short. We went short on this trade. And guess what? We targeted the strike that was right there. And we got out of it when it hit that. So it moves down, got 5, 10, 15 minutes, boom, take profits hit. Okay? And then we got out. And look what happened. Right when it hit the strike, we got all this volume. See how volume picked up right there? Because they drove it down and they took their profits, right? Because they knew where the orders were sitting. It's where would you put your stop loss if you were a buyer? That's what you want to think. Okay, that's where the market's going to go. And instead of being the guy that's getting your stop hits, you're the guy trading to where all the stops are. You're following the sharks. You're following the big market movers. It goes down, it hits that, and it bounces right off of it. It comes down and tests it again. You get another volume spike the last little bit. This is also, by the way, where not only some stops that are like, oh man, okay, good, it's not hitting me. I can't take it, I'm out. And then where some other traders are starting to go short. So all that's happening, whereas what you're doing is you're buying back. Well, now all the buyback starts happening, then boom, 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 goes. And where the order's going to be, well, remember, if somebody went short and they were greedy and they didn't take their profit because they don't know how to read markets, their stops are going to be right here. So you buy, and where's it going to go when it flies up? So all of a sudden you see confirmation, volume's breaking out, it's going up. It's going to go right to where the stops are. So you buy, boom, you take profit right there again. And then you wait for the market to start moving back down. If it moves down, where are the stop losses going to be? Well, it's oscillating. They're going to be right here. Bam, hits it again. All the volume takes off. And the process just repeats over and over and over again. And it's basically what I'm teaching you is how to look at the market like you already look at it, and then take advantage of yourself. Go, where would I put my stops? Okay, how can I go ahead and trade to that? Because you're really good at, I'm sure you're very good about picking stop losses. You know exactly how to put their stop losses in. So use that advantage, because everybody thinks the same way. And use that to stay a step ahead. Well, as a range-bound trader, you can think the same way. That's where you may want to take off your range-bound trade. Okay? Now, another piece that we'll see traders over at Apex add in is we got the high to low. Okay, that's an open to close, high to low. So how far we expect it to move up, or how far we expect it to move down from the open, or from the high to the low, how far we expect it to move. The other thing that comes in is what a lot of traders will often call a butterfly net. And that's where this little darker green and darker pink section is. That's the close to close. And that's where traders expect it to go out of this range, but then pull back into it. It doesn't always happen. Of course, nothing always happens. But we don't expect it to go in a straight line unless we have a lot of volume, like there's a lot of volume pushing through here. But often, this comes up and, really comes close to that high to low, but then look how it pulls back, right back into that butterfly net. So we're sort of expecting it to close. The darker green and the darker red, that's the close to close. So from this close at the top of the hour to this close, the bottom of the hour, we expect it to be within this range, basically, say 6 ticks up or down. And so that can be very helpful when designing spread or butterfly strategies as well, because you can go in and go, okay, well, I expect it to go this far out, but I expect it to come back in, and that'll help you pick your range a little bit tighter. Okay? This is all Ninja charts, which you can get for free. We show you how to get Ninja for free. All right, so, but Greg, does that help on, support and resistance? So how to use that? So that's how I use support and resistance. The support area matters where stops exist. Stops to do a breakout and stop losses. So, and I'm not talking about Nadex, I'm talking about the underlying market. And I so want to challenge every one of you who are getting into this and new, or maybe been trading it for a while. Yes, I love Nadex. I trade Nadex, but you gotta think like an oil trader, like a Forex trader. Where would they put their stops? How far is it going to go? You got to read the pound yen chart. You got to read the oil chart, the S&P chart. What's happening on that chart? Based on that, you're going to then pick your strikes. Okay? Don't just try to go pick strikes on Nadex. You need to look at the underlying chart. And so, Kelly asked a great question. How would that affect the price of our binaries? Well, it's not. The price of your binaries can be affected by it's a derivative of the underlying market. So if the underlying market moves, the price of your binary contract is going to change. Your binary is not a supply-demand contract. It's a derivative contract. So supply-demand is the actual underlying market. The derivative contract is just going to be it's a derivative model. It's this times this divided by this times the square root of this, et cetera, et cetera. And a nice big long formula. I can show you it, but it's a big long formula for how to price a binary. And that right there doesn't matter. So, because what really matters is can you read the chart, and then to see is there an acceptable binary for the trade you want to play. So, if the binary's at the strike that you're looking at, it's going to be $50. If it's out of the money, it'll be more than $50 risk. If it's or less than $50 risk. If it's in the money, it'll be more than $50 risk. Okay, so that supply demand is not about your binaries or your spreads. That supply demand is reading where the chart's going to go. This is where your attention should be when you're in a Nadex trade. It should not be staring at your binary contract's profit and loss. Okay? It should be on the chart itself. And learning how to read where would the stops be? What is the expected movement? What is the volume like right now? Where are we at in the, on a range for the day? Those are the things that you really want to be looking at. And we ran up here. We're up on the market. We hit a deviation high to low right here. So let's go and let's zoom in on that and see what happens. Okay, so this is expected movement on a day. So if you're range bound trading or whatever, so right here we expect deviation on the high, and look how the market then turns right. And this is first thing in the morning. Okay, the pound unit's already hit its expected movement on a given day for the entire day. Well, so I'm going to do premium collection. I'm probably going to have to be a little bit slanted to the downside, right? And boom, goes in. There's your early morning traders. Well, not only does it do that, but now it falls a deviation from the high. So right here, we start breaking that. It hits it. As soon as that market turns around, now I expect it to start moving back up. And finally it does. So it's having those expectations of movement. And you're trading a binary contract. It's a statistical instrument. It's about how far the market's going to move. You got to know how far it's going to move. Not that you're going to know with certainty, but you have to have some sort of objective probability on that. Okay, so question comes in. Well, what about volume? So I know volume is very important. This is Greg's posted, but there's not usually a whole lot of volume at night. On Nadex, are the charts you're showing us during the day? Okay, so you're talking about volume on Nadex. Volume is not what you're using the wrong term. Okay, because the volume that we're looking at is on the underlying market. It's on the pound yen. It's on oil. It's on the S&P. It's on whatever. So we can zoom right in and we can see the volume right there. There we go. There's our volume. This is right now. Let's hop on over there. So here, this is right now. We just had a massive volume spike right there on the pound yen. Okay, it went up, and we had volume. So there is volume. We moved our high to low. We did it right on volume, which is a reversal trade right there. So there's plenty of volume. It's going to be relative. So high volume is relative to the time of day you're trading. So I'm glad you brought that up, Greg, because at night, yes, volume on the underlying market is going to be lower. Okay, but that doesn't mean that volume is low. Is it low for that time of day, for that instrument? And that's why I look at expected volume, the orange line, versus actual volume, the blue line. Because, 200 contracts on pound yen is nothing in comparative to, the middle of the day. Over here we're looking at, a couple thousand happening in a 5-minute period. If we go over to dollar yen, it may even get lower because we don't have any pound coming in. We can look at that. Those strikes are really narrow. But that volume isn't going to impact you. Okay, it may give you more trades because you have more movement, but it's not the volume on Nadex; it's the volume on the underlying market. Right now, I'm just opening up a chart. I'm not teaching anything specifically. I have a 5-minute chart open. I look at 4-minute, 5-minute, 10-minute, and diagnostic bars. So I have 4 charts on every instrument I watch. Open up on my screen. So I use 4-minute for boomerangs and for basically I can go through, but I use 5 minutes for spike strikers. I use 10 minute for MVP, and for magnet pricing, I'm using diagnostic bars for momentum scalps. I also use 4 and 5 minute. I'll look at momentum scalps on those. I also look at diagnostic bars for elite trades as well, and MVP reversals and the BMX reversals. So I can go down the list, but there's always plenty up there, but I have 4, 5, 10, and diagnostic. So I have 4 charts for any specific instrument. And you just link them, so I can change it and it'll switch over. Or you have, I have 16 monitors around me, so I just have all the markets up that I watch. But yeah, and the reason I do that is because there's always a trade. There's always a trade. So it's not hard to find one. You just got to be. That's why I look for multiple plays. So it's not always a good time to kick a field goal. It's not always a good time to do a Hail Mary. So it's not always a good time for a short pass, so you got to look at what's available. What play is the best play right now that's available on the chart? Okay, and then so first just start off, get a play down on an instrument, then get a play down on several instruments, because like if you're watching a commodity, an FX pair, an indice, as you start adding on. That'll help you out. And then, if you're just trading at night, well, you don't need to look at a lot of different things, right? You're going to look at FX. So get that instrument down, get it done on like 4 FX pairs, or maybe all 5, because there's 5 of them open every hour. And then, start adding in more plays to the playbook. So but don't hop around 1,000 different places. I talked about the exact steps on that last week on the Trading Personalities webinar. Let's see here. Jack, yeah, the P&L can mess you up, especially in the last few minutes. Yeah, P&L doesn't matter. As funny as that sounds, I mean, it matters to you at the end. Of course it matters, but it doesn't impact your chart. It doesn't impact the price. The price isn't going to go up or down because your P&L goes up or down. Okay? So staring at something that isn't going to move the chart isn't going to help you make better decisions. That's why I tell people don't stare at P&L. If anything, turn it off and just don't overtrade the size of your account. Same as how do you know the expected move of the day versus the expected range? Okay, expected movement is expected volume, or the deviation levels. So like a deviation level right here, this is a deviation. We were looking at, let's see, earlier I had oil up, right? So this is oil, and this is a 1 deviation move for a day. Expected range is for like an hour or 30 minutes or 4 hours or whatever you set it to. But a deviation is for an entire day. So I'm combining like the daily expectation move with a certain time frame's expectation move. And I mean, it's a blue line and a green and orange box, a green and red box, whatever. That's all it is. So you can keep it really simple, but one of them's day and one of them's specific time frame. So, but there could be some good moves, even at night. You don't have to have massive moves. You can also collect premium. So, which is where we're going. We're getting there. Just trying to get the idea in your head of looking at expected movements, close to closes, Okay, understanding that what are very important levels. Very important levels are going to be like your deviation levels. They're going to be where orders would be placed, not just support resistance, which are usually, but it's not just because you drew the line on the chart that it has power. Like, look at why does it have power? Is there volume at that level? Is that where stops would be? Like, what makes that support level a real support level? Beyond being really good at drawing lines on a chart. So in the expected movement, you just, if you put the toolkit on your chart, you just right-click, go to Indicators, and add on Expected Range. And we got high to low. We have all the training videos over there. All the education is free to check out, but you can choose close to close, or you can choose high to low, or you can choose both. Okay? Or you just load up a boomerang template. That'll show it really fast. Okay. So we're just starting to get into some of the pieces that you need to, because if you don't read the market, where are you going to go to anywhere on actually reading the strategy? Okay? All right. So we got down. These are strategies that don't require big moves. If you would have premium collected on this tonight, would you be doing pretty well? I mean, this is US yen. Flat, nothing's happening. There's no news, so we're not surprised. Obviously the yen market being closed down yesterday, spills over into today, makes it even more flat. So, is this a good chart for making money? Is my question. Is there potential in this chart? Without being some guru, I mean, is there actually something you can do with it? Yeah. Now, can you also sit at this chart, man, go, nothing's moving, I can't find a trade. It opens at 6 o'clock. So 6 p.m. Yeah, like most markets open at 6. So Nikkei opens a little bit later, corn and soybeans open in the morning. So right here is where it opened up. And we're just staying right inside that range-bound market. By the way, I've noticed a pattern that usually the market does stay very, very tight on a day right after a holiday, like on that Japan has a holiday. So there's a tip to write down. Next time Japan has a holiday, go back and find the holidays that Japan has had in the past, like using Forex Factory or something, and look at what happens on Monday when they had a holiday on Sunday, and to see what the day looks like. I mean, this is a very quiet day. You could have been doing some major, even though the Nikkei would open, there was a lot of yen range-bound trading you could have been doing all day long. So exactly. So Joseph says, hey, this looks like it'd be great for, iron butterflies. Yeah, iron butterflies and iron condors, both. So there is potential, even in a flat market. And it's important that you learn that and you don't get stuck in it. So there's this balance. It's like, premium collection. Well, our premium collection trend trading, usually we want some thick premium, we want it far away. Okay, a range bound, we just want it to stay in a range. But if it's moving, slow, but this is not moving at all, that's definitely our range bound. But we also want our directional trades, and we want our directional out of the money trades. There's advantages to knowing how to switch gears a little bit. And as you watch the webinars, you'll notice I'm teaching you those things, like how to do a low risk out of the money trade, how to do an in the money trade, how to do a range bound trade. Because you want to be able to switch gears and not just get stuck in, this is the only way I trade. Because the markets don't trade the exact same every day. Today's a little bit different day. Because today is a day after a holiday on the yen. And there's no major news really at all anywhere that's coming out today. And different markets have different volatility, right? The Aussie may have more one day, the yen may have more, and so they have different implied volatilities and all that fun stuff. So you can learn to take advantage of this, and so range-bound trading is not your only way to trade, it's a way to trade, okay? It's one of the weapons in your arsenal. It's one of the plays in your playbook. If you have a team and you're telling your players what to do for the next play, it's one of the ways that you do that. Okay, so range-bound trading is not out of the money, and it is not at the money trades. This is important to know. Okay, at the money means like you're buying at $50. And out of the money is your risk is less than $50, like on a binary, or it's a spread that has a really big proximity, like away from the market. Not what you're looking for. You're looking for, on binaries, you're looking for in the money trades. Okay, and I'll show you what an in the money binary is for some of y'all that are new. Okay. And why do you think that is? Why do you think range-bound trading is for in-the-money trades versus out-of-the-money trades? Yeah, look at that. It woke up. Now it's at its close to close. Also, look at how the expected movement's there. So it plots out. See how it got a lot bigger? By the way, this is when you'll see John Mark in the room. This is when he does right now, this time of day, like 7, about 8 o'clock. This is when he starts doing momentum scalps on US yen. And now you see why. That exact reason right there. In, done, out. And notice how like right there, yep, Tokyo opened up. So right here, volume broke out. When this bar breaks this bar's high, pop. So 5 ticks wide, you're in, you're done. So P1 trade, momentum scalp trade. There's a lot of ways you can, there's basically 2 ways to put that trade together. Perfect, Chris. And some people are like, well, that's no movement. Well, 42 to 48 is a massive movement. 4 ticks is all you need at night. These things are cheap. So you can buy that thing for $15 and sell it for $40 right now. No problem. Okay? So just have your order in there and ready to go. But even with that, it's within our range. Even with that massive volume bar comparatively, we expected a larger movement at that time of day. So we even have a report over here you can export the expected ranges. And you can see, now this changes every day. Okay, so don't pull it up and think you got it forever, because it recalculates literally every single day. But if we go, Monday, and it'll say, what's the expected movement? We got 9 pips for the 8 o'clock and 9 o'clock hour. It's going to drop down to 5. It was 5 before, 5 after, 6, 5, 5. And then at 2 a.m. it picks back up. 8, 10, 10, 8, drops down a little bit. Then we get up to 13, 11, 16 right there. When the market opens up, 9:30, 9:30 to 10. And then it dies back down. So knowing sort of when to look for those pops in movement can be very helpful. And how might that help you on range bound? So we're already talking about it visually. Now I'm talking about it mathematically. That move pops up, and we are not quite. We're pretty close. We're at 7 out of 9 pips. Could we potentially put in a sell if we wanted to? And if it drops down, put in a buy? Could we leg into a range bound strategy? The list is right under export. If you have the expected range indicator, you can export out the list, and it's updated every week, I guess, but every day on some indicators and every week on other indicators. But it's updated every time you load it, because depending upon what time frame you choose. It's a feature we added in. We also have expected volume now too, and that was way more volume than normal, which is not abnormal considering that we just opened up post holiday. James asked, flat after a holiday, is that on the instrument list? Is open on a chart or other instruments as well? It's not every market. A lot of markets it actually will be flat after a holiday because traders are gone, they're on vacation, they're not back yet, not everybody's back yet. It's just something I wouldn't even write it down in stone, but it's just something I've noticed over the last probably year on the yen, that it seems like when it has a holiday on Sunday, it's often very flat on the following day. All right. Okay, so now what is an in-the-money binary contract? So let's look at an example of it. Okay? By the way, we broke out of volume pretty heavy, right? So we would not be shocked if the volume continues with strength to see it break out of the expected movement, because we had more orders. When you have more orders than expected, it only makes sense that you could potentially break out. So we wouldn't be completely shocked if it did, but I'd want to see that volume continue to go up. If it does continue, and it is, look at that. You're watching it fly up right there. There is some definite strength in here on this. So if it keeps going, then we could actually break out of the range. Now that the holiday is over and they're back online. All right, so let's go in and let's pull up. Let's do it on this while we're here. Okay. Go to the binary scanner. I'll show you what I mean by in the money binary. Got US yen already up. Okay, so here are all the contracts available on the US yen, quite a few of them. Okay? And we can sort of just make this small and on the side. Adjust this. Move it on over. There we go. Okay. So now we go down here and go, all right, 101.47. Wow, so it just popped up to that. Remember I said it'll move fast? I mean, if we go in there and we pull up the contract, we can look at the actual price. Let's see here. And my Nadex, there it is. All right, so we're going to go over here. Let's look at that 101.47 chart. I just want to show you how little of a move can make a big impact. So we got the binaries, and we're going to go to US yen. We're going to go to current hour. We're going to flip on down over here and go to the 101.47, and I'm going to look at the binary ladder chart. So I've got some new cool features coming in over here, right? I don't know if y'all have seen this, but they have some really cool stuff they're adding in. But yeah, they're demoing right now, aren't they? Anyway, so what I want you to see is if I highlight over this, the price was at, I may even have to go into live right now because it looks like they're still working on this, but they got all the binary ladders and the prices built in. So this is a cool feature they've added in to make it easy to see. But what I'm trying to do is show you the actual instrument price. Let's see here. Let's get rid of that. Come back over. All right, binary ladder chart, index settlement index. Yeah, hold on. Let me grab my live account because I know they're demoing all that stuff right now. Unless they made it smart enough to just click on this, which would be great. Let's see if they did. Nope. Okay, hold on one second. Once I get that up. Okay. Yes, yes. See, there's all the trading hours. So yeah, so basically they weren't offered on Monday, but they are resuming. It's really confusing because 6 o'clock is basically the new trading day of Tuesday. So they are back up and running. But coming back over here, going back over to Forex binaries, go back to US yen. 79, 101.47. Okay, quick chart, good. Turn that into their tech team. The recording will be up tonight. It'll be, if you go to our website, ApexInvesting.com, log in, go to questions, forum, general forum, you'll see webinars, newest webinars. And we'll upload, it'll be uploaded tonight. It'll probably be on there either tonight or tomorrow morning. Okay, so what I wanted to do is I wanted to show you, right here we got the entry happened like right there at basically the top of the hour. So at 8 o'clock, if we look at that, and you see, okay, so the price was at $20, just how they do their charts, and then it popped up to 50, like on that move right there, and it's $60. So just a few ticks, just 3 or 4 ticks was more than enough money. So don't think small movements don't mean that you don't have the ability to make quite a bit. Okay, so but I wanted to focus on premium collection. We moved our expected move within like a tick. We're having volume. Volume is dropping. We'll see if it can pick up in a bit of what's called a doji bar, which means nothing happened, but we had a lot of volume in that bar. So we'll see what happens on this one. If nothing keeps happening, if it starts dropping down, we could have a reversal, but I want to see it go below the next bar, like drop below the low of a previous bar. If that happened, then we could have a sell for, say, 101.47. Okay? And that'd be selling in the money. I'm not doing this right now, by the way. I'm just going over it with you. So we could have a sell trade if it starts moving back down. If it does come down, unless it comes back down that expected range, then we can put on a buy on the other side, lower, and now we have a range-bound trade because we're saying it'll stay below. It's like 101.47 once it drops, okay? And then we could, let's say it came down here to, let's see, what's our expected movement? 9 pips. So let's say it came down to 101.40, okay? And let's see what strikes are available over here. There's a 101.42. Okay, so it comes down, it hits that, it starts moving back up. We can put on a range-bound trade. So you can actually leg into your range-bound trades. You don't have to put them all on at once. And this allows you to get, obviously, a lot of times a lot better premium pricing when you do it. So you got Doji on 4 and Doji on 5. Yep. Okay, let's see here. So some of the strategies that you can use in range-bound markets, even when the market's not moving that much. What could you do? So this is what I want to go through. I want to go through a list of strategies for you. Now that we've sort of given you the premise of you want to have expected volume, you want to have expected ranges, you want to look at your news calendar, you want to know your deviations, you want to have an objective view of the market and how far it's moved. Okay? So with that objectivity in place, what can we do? Well, one of them I call expiration premium collection. Okay? That's in the last 15 minutes. So this is range bound or flat markets, basically premium collection trades. So, a range bound trade is basically a market that is, expiration premium collection is in the last 15 minutes before expiration. So let's find one here. And this is a flat day, so it's probably not the best day to show it off, but that's okay. We'll find one either way. Okay, so right here, we're in the last 15 minutes. We're on 5-minute bars. This is the last 15 minutes. And this bar the volume exceeds expectations. Okay? And then this bar breaks that bar's high. We put in a buy. Like, when that happens, we buy a in-the-money binary. Okay? It's cool, but basically the most premium we can get, not at the money, but as deep in the money as possible, but for a decent premium. So this is at 101.30, so let's just assume that since they're 5 wide, this is 101.25. So we buy right here, we go in, let's say if we can buy it for $80 or whatever, that's a premium collection trade, it moves up 15, if we buy it for 75 or 80, we grab $15 or $20 profit, we get out of the trade. We don't hold it into expiration. Okay? If the market goes up, we make money. If the market stays flat, we make money. If the market goes down, but it go down more than 5 ticks, we make money on the trade. Okay? And you can do those in the last 15 minutes of any hour you want. Like I said, there's expirations around the clock on the yen. So you get it from 7 p.m. all the way to 5 p.m. There's not always one that's going to fire off. There's not always going to be the premium there. Hence, now you start watching multiple markets. Okay? Which gives you a higher probability of being able to find more trades to be able to do. So, expiration premium collection. So you can search that over on our forum. You'll find it as EPC or expiration premium collection. It's one of my favorite trades to do, and it's really, really simple. I mean, that was volume exceeds expectations, bar breaks high, buy. Volume exceeds expectations, bar break bars low, sell. Really simple. So, Spike Striker. I find these, you can find them everywhere. I find them a lot on pound dollar, but you can also trade them on oil, gold, really anything. Can do that. And yeah, there's different ways to manage stops and getting out of your trade. So that's really not the focus of this webinar. But if you want to know how to do that, how to manage exiting a trade easily, then just hop on over to our website and under the scanner, and we'll teach you how to do that. Okay, we're under courses. There's a whole course about that. Okay, so the pound dollar, and let's see if we can find some spikes. Let's see, we're just back at settlement right now. There's new settlement levels just plotted. Oh, I need to plot them. Hold on. I don't think I have the spike tracker indicator loaded. That would explain why there weren't any on the US yen. So we'll go over here. We'll go to spike tracker. There we go. Yeah, US yen still moving up. But still, it's flatlined or right at that expected move. So let's see if it can keep going. But you can see that in the money trade keeps collecting. Okay, so pound dollar, very simple trades. So 5 minutes waiting for it to break the high. Doesn't break it. 10 minutes waiting. Doesn't break it. 15. 1, 2, 3. Does break the high. You buy. It moves up about 5 ticks. You take profit. This is why we get in. We get out of the trade. You can do an out of the money or an in the money. So I teach you how to do both on Spike Tracker. So that's a profitable trade. If the spike's below it, we buy when it appears in the bar breaks the previous bar's high. So we have a 5 minute one that doesn't break the high. We got a 10 minute one that doesn't break the high. We've got a 15 minute one that just popped up right there. So 1, 2, 3. So now we're waiting to see if this bar breaks this bar's high. If it did, then we'd have a Spike Tracker. And those are like all day, all night. I'm looking at nighttime charts right now. I'm not looking at daytime charts. So right here, we got a 10 minute one, but it never breaks a high, so we don't get a trade. In the money, it still would have been profitable. Let's see. I was trying to show you all nighttime stuff. I'm trying not to focus in on the daytime. Let's see here. Let's go back. All right, so here's, was that Sunday, right? So looking at the evening, doesn't break the low, doesn't break the low, doesn't break the low, 5, 10, 15, breaks the low. Okay, so we're going to short trade. That trade expires in the money with premium collection. Doesn't break, well, 5, 10, there we go, 10. That one breaks the low finally. So that one had that basically became an expiration premium collection trade. And again, the more instruments you're watching, just get down a couple of these strategies. But I have a whole course over there on Spike Tracker. It's really simple. Like, it's probably one of the simplest trades you can do. All it is when there's a volume spike, by expected volume measurements, there's a volume spike. It'll tell you on the chart. And then you go in and you do either a premium collection or an out of the money trade. Obviously, at night, I'm going to focus on premium collection because I don't expect there to be a whole lot of movement. So I got a request. Can you go back and show the US yen now with Spike Tracker on it? You bet. Let's see, let's pull that up. With that big volume spike over there, let's see what it says is going to happen. I bet it says we have a reversal popping up soon. It was a little bit more than 50%, so it didn't tell us to go. So this one actually didn't fire off yet. So we won't get a Spike Tracker on it. But we got a big move, and it just, check it out, flatline. We're a tick. One tick off of the expectation. So you could try to go, can you go deeper in the money? Is there a trade? We can look. Right now it's about $15 at 101.52, which, by the way, is outside of the expected range high to low. So obviously it was worth more a little while ago. We've just been letting that thing decay in premium. So it's dropping quickly and collecting premium. Now it's starting to move back down. May get if we get some volume, we might be able to get what's called a boomerang or a P2. We already have a classic, so you can do a classic right now. Let's see here. Do the euro yen and pound yen move the same as the US yen? Another trader asked, does the euro yen move in a similar fashion? I have them all up, and I will see high correlation, but I'll also see it completely break. So it matters what kind of news is coming out, and if certain news is coming out that's affecting the euro, that's not affecting the US yen as much, then you'll see that correlation break. So don't, it can be helpful. I like having them up, but don't have the expectation that they must stay correlated. So basically, you want to be flexible in that correlation and allow them to become uncorrelated without it breaking your worldview. Okay? So, But yeah, correlation definitely does help. You can, a lot of times you'll see one thing, and sometimes they'll switch, like which one's the leader. Like Euro yen may move first and then US yen, and it might be like that all night long. And so it may give you a little bit of a head start. But tomorrow it may be US yen, and then the next night it may be back and forth. So it's not, I wish I was a lot more ABC for you on that one, but it's it's just one of those 1, 2, 3 things you got to watch. And let's see here. All the education is available free. Yes. So, we have other things that you can try out. We have trials and things like that. You can check them out. But yeah, we have hundreds of hours of education on all the systems and everything. Let's see. Okay, so we got the EPC trades, we got the spike striker trades, we got the boomerang trades, or boomerang classic trades. Like this would be a sell potentially if it'll break the low ever. Where you go up and you put it right above the expected high to low, so it's 101.51. So if we can get that, I don't know if we're going to get it. There may not be any premium in there by the time it pops up. But we could have done it right up here. What would happen is when it flew up, then you would have put on the classic even before it reversed. So that's why you would have got like 25 or 30 bucks on that trade. And then it pops back down, and now you could have already closed out the classic. So classic, you just got to be ready. Like when it gets to 75% of the expected move, that's what this black line is. So as soon as that happened, like you're ready to get into this 101, 52. The second you can get, say, 30 bucks for it. And then it drops down now to being like worth 11. You close it, you're done. 10 minutes later. And that's just, it's a boomerang. Think about like, if you throw a boomerang, it comes back to you. So phase 2, like phase 1, you launch the boomerang. Okay, that's like phase 1, which is the breakout trade right here, where we bought it when the volume exceeded expectations and broke the high. Phase 2, or classic, is when it's coming back. The classic boomerang comes back to you. So it went out, now it's coming back down. And notice how the volume's dropping with that move. And it's not even going down, the market's just flat. So that's why you like the in-the-money trades at night, because you don't expect the big moves. You don't want to try to... The only moves I'll go in on the big moves will be like the phase 1 trades. And even then, I'm only expecting within my close-to-close range here. I don't expect a big move outside of it. So I want really tight strikes, which is usually pretty easy because there's not a lot of premium at night. Therefore, it's easier to get those low risk out of the monies. But then you got that in the money reversal trade. Let's see here. You also can look over at 10 minutes. Let me put this on here for you. Add momentum volatility prediction right here. And then we'll go over here to 10-minute bars. That's loaded up. You can sell a binary or you can buy a binary. So if you buy it, you're saying the market will... Now, this is the most basic definition because you can close before expiration. We can buy at 50 and sell at 70. We don't have to wait till expiration. But the most basic definition, see how it's dropping down now, is that if you buy, you're saying it'll be greater than the strike price at expiration. If you sell, you said it'll be less than or equal to the strike price at expiration. And as it moves up and down around that price, then the price will change. If it's at that strike price, it'll be worth 50 bucks. Like right now, we're basically at 101.46 on 101.47. So it's at $50 in the mid price right now. You can see how, it's like 2/10 off the mid price, and we're basically 50. If you divide those two, we're at 50. And it's just, really all it is delta. So binary really is a delta price, and that's it. I'm going to capture that because that's perfect example of mid price. Okay. So yeah, so you can sell it at 45 and buy it back at 20. You can sell it at 90 and buy it back at 10. You can sell it at 30 and buy it back at 5, whatever. Classic booms are a lot easier to get when there's low volume, definitely. And yep, so we got a reversal bar. We broke the low. We had expected volume. That is a P2 trade. So that's a perfect P2 setup. We had a classic trade. We had a P2 setup. We hit the expected range. Everything about that said, look out below. Doesn't mean it's going to go far, but that's a barely in the money, deep in the money trade. You could do either one. With that entire setup, then yeah, you could have been selling the 101.47 and just let it tick on down. That'd be more of a classic entry to choose that one. Okay. So And yeah, then buy it back, $20 later type thing. Just grab the money and get out. So we got the expected range channels. They can help you out with butterflies. A binary is buying below and selling above. Now, this is one of the concepts we haven't talked a lot about on our previous webinars. And that's going in and not just looking at 1 hour. Okay? But looking at 2 hour, looking at 3 hour, etc. By the way, if that thing does come up here with some volume, then you do want to hop out. Anyways, you could even hedge off and buy a $6 contract at 101.52. Right. Now it's 13. It's went up. Anyway, so one thing I want to show you, like I said, a lot of people don't do, and I'm going to get rid of the close to closes for a second. I guess I can do both at the same time. Let me load this up. You could look at 120 minutes, or you could look at 3 hours out. Let's see, we got starting at 6. So if we do 6 times 60, well, 6, 7, 8, 9, 10, 11, so 5 hours. 5 times 60 is 300. So 300 minutes. And we can actually do these for 11 o'clock starting at 6 p.m. Okay? So let's open that. Let's see what it looks like. And let's see, is it going to expire for us? And I think it's going to take us to 10. So let's offset it by 1 hour. So what I'm doing is I'm going to say I want to see a 5-hour range, but I want it to end on an odd hour. Does that make sense? Like I want it to end at 11 o'clock. I want it to start at 6 and end at 11. The same thing here. This is something I have not talked about that much at all on previous webinars. And by making it 5 hours, making it start an hour later so that I can make sure this thing ends at 11 o'clock. And then what I've done for myself is, and we can adjust them if we're not right, but I thought I was right by putting it there. Let's see here. What you want to do is, because of the way that it draws, let's do the start, because I started us at 5. Okay, so we want to bump it 1 more hour, because we want it to start at 1800. So let's go. So don't look at the end, look at the start. So let's bump this back 120 minutes. There we go. All right. So now with that, we should start at 6, and then that'll take us to 11. There we go. So we're starting at 6. Now we have an expected range of 16 ticks from now until 11 o'clock. Okay? And we can use this now to go, well, can we get a iron condor for $16 or more? Okay? Like at 6 o'clock on the dot. Let's pop in and grab it if we can. If it's more, then that's even better. And you can do these every single night. You can go in, you can look at this on a daily chart. Okay? You can put up 1,440 minutes. I mean, as crazy as that sounds, we can go in here and we can get the ranges. It's sort of like a deviation level, a little bit different. We can make that 1440 and look at it daily. But again, make sure it starts at 6. Okay, make sure it starts when Nadex starts. So from 6 to this time, what is the expected move? And you can make these for 1 hour, hour and a half, 30 minutes. You know, if you want to trade that market open session between 9:30 and 10. If you want to trade at night, if you want to trade around a specific news report like it happens every week, unemployment claims, oil inventory, natural gas. If you just want to put on trades every night between 6, you want to put them on. You want to put your risk management in place, and you want to walk away and just let it do its thing and hopefully collect some premium between 6 and 11. Put them on, done, come back, check them. You can check them on your phone. But you don't have to sit there and watch them all day. And just doing basic premium collection strategies. So you can do them current hour, next hour. You can do the 5 hours out. You can even do more than 5 hours out, right? Because you got not only you got the 7 p.m., you got the 11 p.m. So you could start on these 7 p.m. You could start them early. You could start them at 3 o'clock. What is an advantage of trading a market between 5 and 6? Whenever a market's not open and doing premium collection. What is an advantage on that? like the Russell is closed, like as an example. I mean, it's a bad example because you can't start before, but it's flat. Yeah, it's closed. It's sort of like one of the things I love doing was I love putting on trades on Friday and they just didn't have this yet, but on Friday for like the next Monday on like stock indices because there's nothing happening. It's closed Saturday and Sunday, so I'm collecting premium. So anytime you can sort of target around those areas that are usually much quieter times of the day, that's even better. Usually don't get a whole lot of movement between 5 and 7, 4 and 7, right? So you can go in there and you can set these things up to start at 4 and end at 7. That'd be 3 hours. So maybe you put the trade on at 4 o'clock to go to 7 o'clock, to go to, because that's when the first one expires, 7 o'clock. So you could do a 7 p.m. expiration starting at 4 o'clock using the expected ranges to have an idea on what might be an acceptable trade. On the spreads, doing iron condors, of course you could start at 6. So starting earlier, what advantage does starting right at 6 for an 11 o'clock spread, what advantage does that give you? More premium because there's more time. Yeah. So as time goes by, now if something happens that's big, you might get some inflation in premium. But basically, it started at 6, it goes to 11. And then look at our close to close. We moved up. We had a big volume right there, but, Tokyo hadn't opened yet, so there's a lot of movement that didn't happen. Thing exploded. We actually did get a spike striker over here. It says it actually may go up now at this point. So we had a perfect P2 set up to go short. It's also we're in a spike striker going long. What would that spell to you? That should spell to you range bound. Okay? So meaning your premium collection trade here and here. So you're selling the upper, you're buying the lower. Okay? So we're talking about range bound tonight. I didn't say look at a big short trade. But we're sitting right at that strike, 101.48 for 101.47. So it's just going to oscillate back and forth. But let's see if it actually can break it. So we got, a 10-minute. So 1, 2, didn't break it. We got a 15-minute. 1, 2, 3. It broke it by a tick. So we might have a little in-the-money move there. My guess is we're just going to oscillate here, for the next half hour. But because the volume's died out. See how we have little to no volume now? See, volume means a lot more when you have an expectation tied to it. All right. So you understand you can do binary butterflies. That's buy below, sell above. You can do them on an hour. You can do them on a 2-hour, a 4-hour. Okay? You can do them on an 8-hour, 23-hour, a week, all with expectations. Now, what is the more conservative approach? Using the high to low expectation or using the close to close expectation for determining your strikes? So Christopher, Kelly, perfect. Yeah, high to low. Because that's going to be a little wider. Now, what does close to close tell you, though? It tells you it'll go up, but then it'll probably come back down into that range, right? So depending upon what kind of pricing you're getting, you might be more inclined to use close to close for spreads of where you think it's going to come back to. Okay? And you're not as afraid on a spread, because on a spread, if you buy the lower spread and sell the upper spread, which looks completely backwards, then, it's awesome. But people don't think about it at all. They do the exact opposite. They do straddles. I'd say probably at least once a week, if not several times a week, I get, oh man, those straddles are great. I think that's what I'm going to do. And I'm like, yeah, you're going to lose because that pricing is built in. And so that's why, I sell to the people who buy straddles. I sell iron condors. That's why I look at my news plan. It's just loaded with iron condors, iron condors, iron condors. So I don't want to be the guy that's getting picked off. I want to be the person that's collecting the premium, not paying it. This is one we did on the radio the other day. So that worked out. I don't know what day that trade was. It's just Mark put this up for me. It's probably, I bet that was a week ago last Friday, because Steve was on with me. He was co-hosting with me, and I pulled up the euro. He was looking for I put a euro dollar trade on. So it's sometime in the last 2 weeks. If you just look at Friday, bull bear binary hour in the morning. You can tell because it was 11 a.m. expiration, and so that had to be when it was. The Friday bull bear binary hour show, and went in and just did a range bound butterfly. So I bought the 36.28, said it's going to be above 36.28, and I sold the 36.48, so it's going to be below it. I collected 40 what, 42.50 on the trade. So not a bad trade at all. I mean, it got $22 up here, got $19.50 down here. So a great trade. Closed it out shortly after that, and walked in $160 profit. So I mean, really not a bad butterfly at all. That was in the morning. It was just a lot of implied volatile. I'm like, wow, this is great pricing. It's only 5 ticks, or it was what? No, this was 20 ticks wide. It was really wide. So that was at 11 a.m. That was a daily. So if you start looking at these dailies, you'll start looking further out in time, which normally you're nervous to do, but hopefully what will help you on that, with that nervousness, is getting down. I mean, and it's amazing. Like 1 tick makes all the difference on pricing here. Anyway, so, get down how to put these pieces together. Get down how to look at expected ranges. Again, you can leg in as things move up and things move down. You can leg into trades as they become worth more, especially earlier in the hour. You can start looking at 11 o'clock right now and going, okay, what's our expected move? We're moving up here. Do I want to take advantage of that? Do you want to pick a binary just based on the price alone? Yes or no? No. Exactly. So if it goes up and it hits your strike, do you want to get out of the trade? This is probably one of the most important things. I've talked about this. Yes. Okay. So this is a perfect example. If I came in, I went short on this trade, and we got, what was the trade like at 45, right? It moved up and it was like at 80 when it was like at 101.48. Okay? I don't even think it was up. I think it was like at 70, but about 70 to 80. You get out of the trade, you lose like 10, $20 on the trade. You're fine. If you hold on to the trade, you're losing like 50 or 60. So you don't have to take the full loss on a trade. Now, if you do a butterfly, what's really cool, if you do one like this example over here, that's what I really want you to learn how to do, is if I can make $22 here, and let's make it easy. Let's call it 20 and 20, just to make it for example purposes and math. If I can make 20 on the long side and 20 on the short side, and let's say I sell this for, I sold it for $20, which means the most I can make on it is $20. Okay, and it goes up to 50. How much do I lose on that side? On the short side, if I was at 20 and it went up and I got out at 50, how much would I lose on the trade? $30. Okay, how much would I basically be up on this trade? I mean, not accounting for bid-ask spread, which I know is going to be $5 or whatever. How much would I, in the morning, would I make on the one that I bought for, we'll just say $80? So yeah, 15 if I hop out of the trade. So I lost 30, I made 15, okay? So maybe I made 20, who knows? But, I could make 20 if I held it, but I don't hold it. I mean, if I get out of one side, I get out of the other side too, okay? So I'm down $30, I'm up 15, I'm down $15. That was my loss on the trade. What if it stays in the middle? What is the most that I can make? If I could make 20 on the long side, 20 on the short side, what's the most I can make? $40, 20 plus 20. Okay? So you're telling me that if I lose 30, but I make 15 because I hop out, okay? We can even say I lose 20. Added some more bid-ask spread, whatever. So if I could lose $20 if I took a hit on one side and took a profit on the other side, or I could make 30 if I closed early, or 40 if I held on to the thing. That's a good risk-reward ratio. Lose 20 to make, say 40, or lose 30 to, whatever. So we're talking about 15 to $20 loss, $30 to $40 profit. On a range-bound trade, getting close to a 1-to-1, maybe even right at a 1-to-1 or better. I mean, if I could make $40 on a trade and I'm only losing $15 or $20, that's a 2-to-1 reward-to-risk ratio on a range-bound trade. So not being greedy, being willing to get out, being willing to take some of those $20 hits and move on makes all the difference in the world. So this one I placed in the morning. I don't know what time I got in. It's just a screenshot from one of the trades that we did in the morning on the show. But I do them in the morning. We do them at night. At night, without implied volatility, without any news, you have to get in earlier. You have to start sooner. But that's okay. That's why you got the ranges. So you just use the ranges over here. Now, the range hopped up and it popped. It hit right there. Look what we just did. We're right on 16 out of 13 ticks of movement. So, Yeah, it's probably. I'd love to. We'll have to do a trading session one night so we can go through and you can start seeing me play with all these contracts. But anyways, the other thing's only like 1 or 2 ticks off, and it's because of settlement. When the thing starts adjusting down and we get a few ticks down, it'll tighten up. One of the cool improvements I saw posted on the notices section, they're going to tighten up how they do it. They're going to drop the sequentials and just do the average 15 of the last 25, and it'll bring that price down quick. Like this indicative is going to move a lot faster real soon. So just watch how it starts flying down. In about a week, the 28th, that's when that goes into effect. Yeah, so you won't have like they drop all the sequentials out right now because it's the middle 15 of the last 25 quotes, not including sequential quotes. So if it quotes the same thing like 50 times, it only counts it once. If it's 50 times in a row, it has to be a different tick for it to count it on FX. And they're dropping that sequential rule effective, I want to say it's July 28th. Let's see here. So it's on their notices page anyway. Yeah, and sometimes, I mean, it'll go up and it'll go against you, and you get out, and you're just like, should I have done it? What else should I have done? And, I mean, right now, this thing's, the way it's quoting, it's just, the further out you get in time, and that's the big thing I tell you. I mean, right here, we're talking about 20 minutes from expiration. It's going to be harder to play at night, 15 or 20 minutes from expiration. But if we go over here and we look out at the next hour, I mean, that's 10 o'clock. We go up to 11 o'clock. We're going to be able to push things out in a whole different way. Let me make sure we got live up here. And let's see. So you can go up and, there's 101.54 at $14, 152 at $10. They don't got really an equivalent right here on the daily one, but as it moves around, it will be. But as you start getting in there at 6 o'clock, these things will be right lined up because that's, just as things line up. And especially on the spreads, they'll be lined up. And that's why you see me, on my news plan, you don't see me talk about butterflies that often. You'll say, hey, check out butterflies if you want to. But I'm like, iron condor, iron condor, iron condor. So if the strike price is at 101.83, the indicative is at 101.88, the binary will be in the money, right? Because the strike is, if you're selling, it'd be out of the money. If you're buying, it would be in the money, okay? Because every strike is always in the money and out of the money. Always. So it's in the money for the seller, out of the money for the buyer, or it's out of the money for the seller and in the money for the buyer. So if the market was at 101.88, this is a question by Doug, and the strike was at 101.83, then your binary would be in the money, say at $70 to $75. Is it possible for the binary to drop below $50? Say bid ask of 40 by 45, while the price stays above 101.83. While the price stays above 101.83. Well, depends on which one you're looking at. Okay, are you looking at the Reuters data feed? Are you looking at FXCM? So if it goes below that price and it's at 40 or $50, meaning so if while the market stays above 101.83, trying to get through this entire question here. Is it 101.85? Could it be at 35 by 40? It could be, but what are you looking at on your chart? Because the pricing is going to be based on last. It's not going to be based on it's going to be based on bid and ask, not on the last that's on your chart. So you're probably looking at the last price on your chart, is my guess. It's how you're quoting. And so you're looking at historical information. You're not looking at live bid and offer. So yes, the last could be below the price or above the price with the price being below it. But what is the bid and offer? And what is the mid price of that bid and offer? So basically, how do you have your charting program set up to quote for you? And that's one of the reasons I'm going to be excited about how they're doing the indicatives too. It'll make it just faster. But let's see here. You can go through and you can set up, depending upon what kind of charting program you're using. But you can choose last. You can choose ask, you can choose bid. There's even like bid and ask, like indicators and mid indicators and things like that. So if I go to ask, it's gonna, show me a different chart. You do the same thing on Thinkorswim. I mean, you can, so it's gonna piss it off now. And we'll just put it back over on last on this one because I don't have it all set up to do everything I want it to do right now. But I mean, you have to go in and configure it. It's a pain. So I have a Reuters data feed as well to check it out. But that's why you're seeing that. So if you're wondering why you might see a discrepancy, it's because you're looking at last. You're looking at historical, not live bid and ask. And historical may be like milliseconds ago, but that's why you'd see it. Would this be a candidate for scalping in the last 15 minutes? It potentially could be. We need a down close or nut close first. So, and we had that. I mean, I wouldn't recall that either. So we've basically been like doji back to back at the moment. I'd even more likely to go in and see if I can pull off some sort of like, crazy, quick butterfly on it. Let's see here. Yeah, so that we could go into a whole thing on it, but like, see, like, look at where it's at, 101.49. You're looking at this is a last price. It's 101.48. So it's not the current bid and offer. Let's see here. So if the current bid and offer moved, then yes, it could definitely change. So right now it's the indicative is 2 ticks above. The underlying last is 1 tick above. But I'm sure that's why you're asking the questions. You've seen that difference. You've been wondering what causes it, and it's a last versus bid offer. Okay, so we talked about butterflies a little bit, using expected ranges, using close to close. And another strategy I'm going to cover briefly is going to be iron condors, but I'm going to show you how to easily do them. Hopefully you got some good tips there on the butterflies. Iron condors are going to do the exact same way. And make sure you check out the news calendar for more on that. I'm going to do a very detailed iron condor webinar this coming month by demand. A lot of people have really been asking for it. But right over here, so I mean, you got a whole list. You got spike striker, you got momentum scalps, you got P2 classics, you got boomerang classic or P2 trades, you got boomerang classic trades. We got binary butterfly trades. We have, and then now we're talking about the iron condors. Again, right here, there's a whole section on iron condors. I'm going to make the iron condors as simple as I can for you. Okay, so for those of you who stayed on long enough to hear all this, on the iron condor, you go to the spreads, and let's pull up, I don't know, euro dollar, or we'll pull up pound to have probably more implied volatility in it. All right, and then let's find, there's different ways to do this. And really, you have to do these early. And at night, you got to start them like at 6. So you know what? I'm going to go ahead and I'm going to get rid of pound because I want to show you like a decent example, okay, to help you learn it. And let me see if I can find one. I want to find a really good learning example because once you get the concept down, they get really easy. Okay. The fastest way for me to find these is to go in and just find basically the low profit, what would be like right here. See, it's $36 minus $4.62, $10 minus $4.88. Okay. Now, don't worry about this being natural gas or crude oil or whatever. Just go with me for a second. Okay. So right there we got, what is our maximum profit? Tell me what the maximum profit is. Zoom in on that. If the market was to stay within the range. So check it again, Greg. You got this. Yeah, there you go. Just typo. Okay. 46, 40, 46.20. This does this, oscillating around. And that's including fees, by the way. Okay? So that's after fees. So we're actually a little bit higher than that. It's like, what is that? $1.80 times 2, $3.60. So, let's call it an even $50 if we took the fees out. All right. So, because we have $1.80 out of that one, let's make that 12. We had $1.80 out of that one, I'd make that 38. So 38 plus 12 would make it 50. And I'll show you, I'll open up got my pen program, I need to reboot, get that thing back on. Alright, so right here, so 12 and 38. See, I'm subtracting fees on the scanner because I like my fees out of the way. Anyway, so $50. Okay, so $46.40 after fees, $50, not including fees. How much is a tick worth on Nadex? On every spread, how much is a tick worth? $1. Okay? Again, I can make $50 on this. Alright? Everybody got that down. I can make $50. I don't care about proximity. So I want you to drop the idea of proximity for a moment. So, I mean, we're going to have it, but it's not a big part of your equation like you might think it is. Okay? If I'm buying this, or if I'm selling this right here for 102, I'm buying it for 102.62. Okay? I'm buying it for 11 ticks lower than where the market's at. Okay? If I sell this for 103.12, I'm basically selling it like 38 ticks higher than where the market is. So I'm buying, if I can buy for $10 below the market and sell immediately, how much would I make? Now, this isn't what's happening, but think about it. If I can buy it for $10 below and I can sell it right away, what would I make on a trade? Make $10. What if I could sell something for $38 above where the market is right now and then close it out? What would I make on that trade? If I could sell for $38 above the market and buy it right back, I'd make 38. Okay? So you're getting to buy lower than the market and sell higher than the market. Essentially what we're doing is we're buying at 102.62 and we're selling at 103.12. You like that? Buy low, sell high. Okay? But don't even let that get all like in your head, because then you'll make it even more complex. I'm just trying to like get you to understand we're not buying at where the market is. Okay? We're selling higher than the market. We're buying lower than the market. But I don't even care about all that proximity stuff. I just want you to see it. We can make $50, not accounting for fees, to make it simple. We can make $50 on the trade. If I can make $50, that means $50 is my maximum profit. All right? So for a 1-to-1 loss, I'd have to lose $50, right? For maximum profit to a loss, if I wanted to say, to make it a 1-to-1 trade, as long as I don't lose more than $50, then I have a 1-to-1. Is that accurate? So if I can make 50, then I don't want to lose more than, say, 50. Okay? Well, if this goes up, okay, if I bought this contract, it says I can make $36 on it. So let's say the market flies up. This one says I can only make 10. Well, if it flies up 50, we'll make it 12. Sorry, another numbers are changing now. So let's stick with that 38 and 12 that we had, okay? So if it goes up, I can make $38. If it goes up 12 more, then I'd be break even. But if it went up 12 more above that, then I'd be break even. So what I want you to do is go, okay, if I buy it, I'm trying to think about the easiest way to put this before we do the official webinar. If I buy it at, I'll put it a different way. If I sell at 103.11, which is, say 38 ticks higher than the market, okay, and I'm buying 12 ticks lower than the market, that's 50 ticks, which means the market would have to go 50 ticks higher than where I sold before I'd lose $50. It's going to have to end up $50 higher than where I sold. So if I sold at 103.11, it's going to have to go to 103.61 to be down $50. Right? So if I'm down 50, how much am I up on the one I bought? I'm up 11, right? Because I could make, or 12. I can make $12 on this trade. So I'm trying to help you put together the different pieces. And I know it feels really complex, and that's why I want to do an official webinar just on it. I'm just trying to make it as easy as I can for you. This is more just a bonus add-on. It's my favorite trade. That's why we need to separate a whole webinar just for it. Okay. Let's get rid of all the funny math. Okay? So if I can go in and buy something for $101.50 and it's at $101 and I can, we'll do it down here. We'll do, okay, so we're going to buy 50 cents lower and sell 50 cents higher. So I'm selling, 50 bucks up. I'm going to make every cent, we'll just say, is $1. Okay? So I can make 50 there and I can make 50 there. My sum of that is $100. That is my max profit. Let me make this larger for you. This is the number to focus on. Max profit. Okay, of each one of these. And then just add them together. Okay? That's what I want you to focus on. This is where it gets easier if you'll focus on this number. Max profit. Okay? If the market moved, if I sold it at 101.50 and the market moved up 50 ticks and it closed out, I'd be down nothing. I'd basically be break even. But I bought it at 100.5, but it caps out at 101. Okay, so this is my floor / ceiling. Okay, so the most I can make on this is $50. So I'd be up 50 bucks. That's with the market going 50 ticks up. Okay, and then I have $50 in profit. So I'd make $50 if the market moved up 50. But if the market moved up 100, then I would still be up 50, but then I'd be down 50 on this one. So now I'm break even. And when this finally clicks in your head, you're going to be like, oh my gosh, okay? If it moves up 150, I'm going to be up 50, I'm going to be down 100, and now I'm down 50 bucks. Okay, so that gives me like 150 ticks up and 150 ticks down for a 300 tick wide range for a 1-to-1, or 100 up and 100 down for a 200 tick wide range for a break even trade. So if we go take this trade we had over here and just to again make the example simple, and let's just say it was, well, we had 50 on there, right? So we said 101. I'm just trying to make the example simple for you so you can start playing with it. 100.75, okay? So we can make 25 and 25. Over here we can make 50. So if the market goes up 25 pips, because the market's trading at 101. If it goes up 25 pips, I'll be up $25. I'll be up 25 on my bought one. I'll be break even on my sold one. If it goes up 50 pips, then I'll be up 25 on my bought one. I'll be down 25 on my sold one. I'll be break even. Okay? That's the 50 pip up move. If it goes up, 75 pips, okay? Then I'll be up 25 pips. So this is a 25 pip move, a 50 pip move, a 75 pip move. And then I'll be down 50 pips on the one I sold. So I'll be down $25. If it goes up another 25 pips, 100 pips, you'll start getting this thing. You'll be like, wow, wait a minute. Okay, so I'll be down 75 pips, and now I'm down 50, because I'm up 25, down 75, I'm up, down 50. So we're talking like a 200 pip wide range. It becomes insane, okay? It's the coolest way to trade the spreads. And I'm gonna have this easy, and I'm gonna have a calculator up for you. I'm working with another trader. We're gonna make a calculator that's gonna go into the website, so it'll be web based for you, so we can make changes to it and improve it for you. But what it's doing is, basically imagine having a trade that can go up like 50 or 75 ticks against you either way, and you're still profitable. And that's why you'll always see these iron condors hanging out on our new trading plan. Yeah, it's finally starting to move its way back down. We'll see what it does. There it goes. We'll see on spreads, I don't have to take these stops like we do like over on the binaries. Because the binaries, if it's one tick against you at expiration, dude, you're done. Okay? If it moved up and I was break even, it moved one tick against me, how much would I be down? If it moved up like, say, 50 pips and we're up 25, down 25, what if it moved up 51? If I'm on a butterfly, I just got hosed, right? Like if it expires there because I lost everything on one side, I made some on the other. But if I'm down a tick, I'm down $1. Okay? Like, that's it. So I can let this thing go further against me. I can do them closer. Maybe I can only get six. I mean, remember what we said the range was here? 6 to 11? We said it was 16 ticks. If you've been following these at all, can you probably pull out a $15 or $20 6 p.m. to 11 p.m. spread on the US yen? Probably. Okay? If it just moves that range, you're pretty much breaking even. If it moves about $5 above you, make $5. What if it goes up and it comes back down and you only make $5 or $10 on it? So that's okay. I'm not looking to always make the full $50 like in the example, okay? I'm not looking to always lose the full 50 either because that's to move insanely far. What I'm looking is to have very often break even, small profit, small loss, and then have some nice consistent profits coming in as well. And if you'll learn to play with this, if you'll use the expected ranges to make sure it's an acceptable range, okay? And then look at the reality of how far it can go either way and you're okay, then you're like, that's nuts. And then I'll look at deviations. Like we're looking at oil right now. We came up with $50 as our number. What is the deviation move on oil? Let's look at it. 110? 55 is a half a deviation? And that's if it finished. Remember, the deviation is a full day. It's not where it expires. So this is telling me right now I can get about $50 on an oil trade right now. Now that was from 2:30 yesterday, okay? So on oil trade right now, I can get like $50. Well, if it moved the full deviation, I'd be down about a 1-to-1. If it comes back at all, then I'm down less than 1-to-1. It starts coming more and more and more in my favor. I'm not saying oil is the perfect example, or natural gas is the perfect example, or whatever. All I'm trying to do is show you, start playing with this stuff. My challenge one trader the other day, is just go put these things on every day. Put a daily on every day at 6 o'clock on all the indices and just see what happens. And then time into your deviation levels, time into the expected movements, and to see how wide the range is. And that is a buy the lower, sell the upper. Yes, it's buy the lower, sell the upper, buy the lower, sell the upper, buy the lower, sell the upper. So it is not a straddle. It is a range bound. So the price I'm buying at should be below where the market is. The price I'm selling at should be above where the market is, which is opposite of a strangle. So I'd be buying that for a straddle right there, right? So whereas I'm going to be buying that for an iron condor. And it looks just stupid. Because you're like, I'm risking 460 to make 40? Yep. Technically. But do you have to take the full loss? Can you get out of the trade? Yes, we use the deviation levels at night all the time. So the expected moves are more helpful because they're going to be, toned into the hour versus the entire day. I use them more at night, like whenever we have news, things pop. Okay, so hopefully that's starting to trigger a little bit. We'll do more on it, but I mean, the simple formula, I'm not saying that 100% accurate, but the simplicity of the formula is whatever your max profit is, that's pretty much how far it can move above where you bought or below where you sold, and you still break even. So, and that's not the exact formula. I'll get it all worked out for you. If you watch those videos, you'll have it. But a lot of people will want me to break it down and make it really, really simple. So I'm trying to strip out proximity and premium and all those other words that make it complex to people. And I'm trying just to make it really profit plus profit equals this, and do this, and this is it. And so we'll have it there by next, here in the next couple of weeks. But hopefully that'll get you started on it. Just start demo trading them. But that was a lot of information tonight. I wanted to expose you that there's a lot more to nighttime trading than just buying or selling binaries that seem to not have any value in them. And this is really cool. I mean, you start doing these iron condors and these butterflies, especially the iron condors in my opinion. I mean, these are trades that can just chill out. They're not intense trades, especially the spreads are not intense because it's like $1 a tick if it goes against you. You're not flipping out. But, I mean, between iron condors, iron butterflies, boomerangs, We got the MVP 10-minute strategy. We didn't even go into that one that much in detail. We can do that a different night. We got the Boomerang P2s. We got the Boomerang Classics, the Spike Strikers, the EPCs. You have trades to do. So there's plenty there, and if you'll just, none of them are really that hard. Okay, just look at the range, look at the premium, do the math. That's probably the hardest part about Iron Condors. EPCs and Spike Strikers, those are really simple. Boomerangs take a little bit to get used to, learning how to read the volume. But, they're a little more active. But, there is plenty of stuff to do at night. And I sort of want to do it because I know some of y'all, that's the only time you can trade. And that's why I wanted to do this webinar to expose you that there is stuff there. We have the training on it. And we have people like in the trading pit at night always asking questions and posting trades. And we'll be happy to help you out. Okay? So, would it be expensive? Yeah, it'd be expensive. Yeah. But if you make $50, let's say you put up that trade, that example. I mean, define expensive. Is it expensive losing or is it expensive putting a lot of money up? And I'm not saying you have to do crude oil. Remember, we'd focus on, if it was 6 o'clock, we could focus right on FX. Just FX is expiring in an hour or two, and there's no implied volatility, so I want 5 hours if I'm going to do these things on FX. I mean, look at all my nighttime news trades. You'll see they're 11 to 7, 11 to 7, 11 to 7. You'll see 6 to 11, 11 to 7, So you'll see I have like 5 or 6 hours built in there. But, so that trade, you put up like $9.50 to make $50. That's more than a 10% return in a single day if the trade is profitable. At max profit there. So, next week we are going to be covering how to trade the oil inventory report, a trade that comes out every single week. So that'll be fun. We'll be talking about some of this stuff and a couple other things I've discovered that I've been doing as I watch that trade week after week after week. Let's see here. Do you have information about what is the expected move? Heidi, I'm not sure what you're asking. The expected move is how far we expect the market to move. So if we expect the market to move 16 ticks, then we expect it to move 16 ticks from this price up or this price down. My suggestion would be go and look at the Apex indicator course and watch the expected move videos there. The way you know is it's plotted right on the chart. It tells you right there, expected 16. So if I just middle mouse click or if I use a data box, it's the other option. Move that out of the way, grab the data box, expand it down, then go over here and just highlight, and it'll tell me like right there, expected move 16 ticks. So it tells you how far. Also, you can visually see the range of open, for the open of the hour, open of the 5 hours, and then you can just move your mouse over like right there. That's 101.56, and that comes down to 101.24, and it's expected to close within 101.31 to 101.49. So, but yeah, just ask questions. So, Heidi, your questions are great, and you ask a lot of questions that other people are afraid to ask, and that benefits a lot of people. So I'm glad you ask them. So keep asking them. Like a lot of people have questions that you have, and they're too afraid to ask them. So by you asking them, then we were able to answer them for others. Let's see if there's anything else. I think I got every question. I hope I did. Somebody was asking about how to get in the elite room. If you're an elite member, you get in the elite room. If you're having any problem, then just hop on over. Hop on the chat or go to questions help desk and we'll help you out. And we'll take care of you. All right. Well, y'all have a great evening.